Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 15th of September. And it looks like it's party time for the FTSE and the stock market, all the rich people back after their summer holidays. We've broken the 200-day moving average there at 76.30. We've also broken the falling February trend channel, which has been hurting the market since the beginning of the year, and above the 200-day moving average 76.30, looking for the initial target there, that May resistance line there around 77.90. Best case scenario is that we break that over the next session or two and head up to the top of that red rising trend channel, steep one from August, as high as 8,000. Obviously that seems to be a bit of a pipe dream at the moment, but the setup was good. We had bounce off RSI 50 in the first week of the month, and then we had consolidation above a rising 50-day line, that sideways shuffle as I call it, which actually called the push to the upside. Early at this stage, back below 76.30 on an end-of-day close basis would delay the break higher that we have. RSI now overbought for the first time since back in January, which is quite a miracle. But here we've got a situation where hopefully the breakout will at least delay the market coming back on the recent breakout. Moving on to the DAX, which was on the edge, it has to be said, but typical of what you see in these sort of technical situations. We had a line there from back in December, tried to push below it and then bounce back. We had the 200-day rising, so that was helping this market. We've gapped through the 50-day moving average now at 15,900 and above the 50-day line, looking for a retest of the late July peak through 15,500 by the end of this month. Early and end-of-day close really well below 15,600, really questioning the newfound strength in the German market. Moving on to the Dow, which actually, having led the other markets higher, it doesn't actually look as spectacular as, say, the FTSE at the moment, which is probably a first this time this year. Here we had bounces for this market above the October uptrend line there at the beginning of the month, and now we push through the 50-day line at 34,800. Above that, obviously logically looking for 35,500 plus by the end of this month. Only well below 34,500 now, recent swing low, really delaying the upside there for this market. RSI at 55, which is back on the right side of neutral. Moving on to Bitcoin, which is still struggling. It doesn't have any of the equity-induced party atmosphere, but we did have bullish divergence going into that last low that we had there, testing the June support around the 24,900 level, and so we're assuming now that we have actually seen the worst. Initial target here, the 200-day moving average around 27,800, and then maybe we'll take a view after that. But what's interesting is that the 50-day line crossed below a rising 200-day moving average, so the next time they cross could actually be a golden cross, so this could be the start of a turnaround for Bitcoin. Obviously a punchy call there, but let's be punchy at this time of year. There's a line of resistance there also to break at 28,000, so maybe if you're cautious, you wait for that to go as well before assuming that we're back to 30,000 plus on the digital currency. Moving on to the stocks, and not that many big rises today, but sort of following up on the recent winners. First one is Eneraqua, which hit our initial target there around £1.22. Above that, we're looking for £1.60 as soon as the end of the next month, which is a June resistance line projection in the top of that triangle that we've had. We had a bear trap below the 60 pence level, and then a gap close buy signal on the 1st of September, which has obviously come good, and unfull gap to the upside after that on the 11th. So everything going well on the charting front there, and then to add to it, a bullish divergence, which was the trigger for the sharp turnaround. On to Gfinity, which I know has its fans, and they're hoping and willing the shares to go up at the moment. Broadening triangle base there since February, and we've got that sideways shuffle above the 50-day, rising 50-day line. We've had this market basically above the 50-day line since the second week of August, which is quite impressive. So expecting this market to bounce off that line there from back in April, using that as new support at 0.1 pence, and then hopefully at least retesting recent highs, and the main resistance for the shares around 0.15. Best case scenario here is up to 0.2 pence by the end of next month, which will obviously be rather nice from current levels. On to Helium 1, where people are taking their positions against or ahead of the big spud that we're looking for. The company's raised its money at 6p and it doesn't really matter now what happens, but at least we have seen the market stay at or above 6 pence, and that is a very bullish sign. Above the 200-day line there at 6.8 pence, looking for at least 8 pence as a rebound, even if the market then fades after that, which at the moment doesn't look like it will. Loop up is next, and the picture here, a decent follow through on the rally that we had to get this market off the recent lows. So here you can see that we're through the 200-day line there, 2.9 pence. Above that, looking for 4.5 pence by the end of next month. Obviously, we hit the first target there around the 3.2 pence level. Ideally, no price action now, but back below 2.75 pence, which was resistance on the way down, especially in May and June. Good to see mobile streams back in play. It's been gingerly and gently rising now. There's a V-shaped bull flag there, bouncing off the 50-day line, which is now rising, which is one of our decent signals there. Above 0.1, looking for as much as 0.18 by the end of next month. Obviously, if you're cautious, you want to see this market through the 200-day moving average at 0.11, as that was the last block on progress back in June. I don't think we've been above the 200-day line properly since back in March last year. So this could be the big turnaround. Hopefully there's not too much fundraising to spoil that rally, but this could be the big turnaround that we get. And there's also been an RSI rebound off neutral 50. So while we're above that 50-day line, looking quite chirpy there for mobile streams. Next on to Mode, or as it's now called, R8 Capital Investments. Here we've got a nice consolidation here, a new bull flag here with two V-shaped bull flags since the beginning of last month, and then the bull flag now. So above the neckline resistance, recent neckline resistance at 2.4 pence. Looking for that initial target there, once again hitting that line there from back in January. We hit it once, which was obviously very pleasant. Above 3.3 pence, looking for 5.5 pence as soon as the end of next month, while we remain above 2.3 pence. On to a potential rebound recovery situation, which is Neometals. Obviously, it's not had a great time in the recent past, but just the first inkling or first sign of a broadening triangle base from back in February. Initial target here to break 26 pence. If we can get through that, then it would be up to 42 pence, maybe by the end of the year, or hopefully much sooner. But early days yet, and obviously any price action now, any new lows would negate that rather optimistic scenario. On to power metals, and or power metal, in fact, as it's called. Unfilled gap to the upside earlier this month, the second week, last week basically, and rising 50-day line. So it's the two very strong signals there. A sideways shuffle above the rising 50-day line and unfilled gap to the upside. Just looking for a clearance now, basically, of the 0.89 pence zone. Initial target here at 0.93 at the top of that triangle from May, and then after that, hopefully by as soon as the end of next month, up to 1.3 pence, which is a March resistance line projection, and helped along by the famous Rick Rule being on the shareholder register there. Panther Metals is also trying to resurge after its recent weakness. Here we've had a nice bounce, as was expected actually, at the floor of that broadening triangle from back in March. That was around 2.8 pence, and the shares have delivered after being very, very oversold. The RSI there down to 10, and we're looking for up to 4.2 pence by the end of this month. Moving along to Pensana, which has done exactly what we wanted to do, and probably what Paul Atherley wanted it to do as well, given that he bought shares a little while ago. Initial target there hit at 36 pence, which is always very gratifying at the top of a rising trend channel base. Above 36 on an end-of-day close basis, looking for as much as 50 pence by the end of next month, and that would do a lot to fill that gap down that we had from March back down from the 55 pence area. It'd be nice to see an end-of-week close today above the 200-day moving averages. We haven't been above that properly basically since back in June 2021, so that really would be a big turnaround there for Pensana, and probably a relief for many there. On to a stock which the bears have got their teeth into, which obviously means that we're always looking for this to go up as much as possible. Here, the initial resistance here was around 160, 170, and that's now become new support for the shares, which is healthy. Above 160, still looking for a retest of the highs of last week, up to £3 plus, and obviously that would be hopefully a decent pie in the face for the shorters there. On to Silver Bullet, which has almost delivered what we wanted it to do, a target up to 85 pence. We're just a couple of pence short now of that target. Unfilled gap to the upside today to celebrate the turnaround there, and above the old initial resistance for 2023 at 71 pence. Looking for 85 pence, and in fact we're looking for a bit more now, probably up to the line I'm about to draw at the moment, which is coming from there from back in the early part of last year, heading as high as £1.40 maybe as soon as the end of next month. So looking very strong there while we're above the 71 pence level. Just the last three to go, and great to see Seed Innovations turn around so strongly over the course of this week. Unfilled gap to the upside, started the latest push through 2.6 pence, and we hit our target there at 3 pence earlier this week. The best case scenario target was up to 3.8 pence, which hopefully will hit next week, and then after that probably looking for resistance on the way down up to 5 pence, and that resistance there from back in the summer of last year. At this stage only back below 3 pence, really questioning the ongoing recovery from Seed, which has obviously taken quite a long time. On to Synergia, which has had its decent breakout there. What's notable now is that the 50-day line is now rising. The 200-day line is also rising as well, so that means we're heading for a golden cross, and the route to a golden cross tends to be the strongest part of the cycle, so therefore we're looking with the relative confidence to the top of that rising trend channel at 0.19 pence by the end of this month now, and upgrading that from from the end of last month, which was a previous target. Upside value bar we hold above 0.12, which was the August resistance for the shares. Finishing off with Skinbio, and here the picture is a nice one. We've had a cross between the 50 and 200-day lines. We're in a rising trend channel, which I'm just about to draw now, which is looking rather healthy. Top of that channel now heading towards the low 30s, or in fact 34 pence to be precise, and we're looking for that while we're above the recent support around 20 pence, above 20, looking for 34 on Skinbio Therapeutics. That's it from me today. More updates tomorrow.